Hey, everybody. Happy Tuesday afternoon, and thanks for checking into our TDR Trade Black podcast. I'm your host, Shad Dales. Big announcement yesterday involving the Cannabist Company Holdings, who announced that they're exiting Florida. This is part of the shift in strategy for this business, but was it a good decision? So far, the feedback has been it's been positive. Why? Well, let's find out as we dive in deep here today with the executive crew. So let's first bring in TDR co-host Anthony Varrell here on a Tuesday afternoon. Good to see you. How are things?
Good to see you. It's good. Ready to dive in.
Yes, post 24 hours yesterday, the Cannabist Company Holdings announced that they are exiting Florida. So let's welcome in their CEO, David Hart, along with their president, Jesse Channon, back to the podcast. Good afternoon, gentlemen. Good to see you. How are things?
Busy. Good to see you.
Very busy.
Just a tad busy?
Absolutely.
Yeah, well, let's jump right into that. You made the decision, made the announcement yesterday that you would exit Florida. I look at this, and I think a lot of people are looking at this as this is just a refocus on some of the key markets that you guys, I think in a lot of ways, want to focus on where you do really, really well with a strong footprint. So explain to us how this was all, like with you being the CEO, David, why this decision was made, and I guess what it presents for the company, I guess the overall strategy for the company moving forward based off of this.
Sure. So I think this is just it's an update from what we talked about earlier in the year. I think we've been on with you guys a couple of times. Jesse and I have talked about building a better business, not a bigger business. And I think this is just a step in that evolution. Florida clearly was not an ideal market for us. You can see we disclosed the financial performance for 2023 and for Q1. It was our worst performing market. That's primarily because of the asset base that we have. We were seesawed, if you will, in terms of the amount of cultivation manufacturing capabilities versus the front of house or the number of dispensaries we have. And so to right size that business would take some significant CapEx spending, which I think 2 years ago could have been something perhaps we would have looked at. But right now, this is clearly an opportunity where there's a lot of interest in Florida. There's a lot of players continuing to put aggressive CapEx spend, capital spend into that market. And when we went through a process, we found, it was a great outcome. And these assets are going to find a better home with a number of individual companies that have very specific 2-3 year plans to execute in Florida. And it allows us to focus on the markets that are driving organic growth and margin expansion opportunities for us. So I think people did not recognize the financial profile of our Florida business. So we wanted to make sure we provided that transparency at this point in time as we're moving forward with the transaction. And we also wanted to time that with the reduction in our corporate expenses as we continue to reduce our geographic footprint.
Right. So go ahead, Anthony. Go ahead.
I was going to say, you talk about reduction in corporate expenses. I know that the press release was accompanying with a $10 million reduction in costs across the board. I mean, from what I know, I understand that those decisions can't be easy. Like, that has to be a long, arduous process. Like, is there any color you can give relating to where those cost efficiencies are coming from? And how it's going to affect the overall business on a go-forward basis?
Sure. So it's there's two components to it. One was as we are reducing the footprint, there are things that just fall away. There's a lot of assets in the state of Florida. We have a lot of our team members down there, a lot of facilities, tax IDs, et cetera. So there was a significant amount of corporate or shared services required just to operate in the state of Florida. And as we've left Utah, we've left Missouri, now we're going to be leaving Florida. We had to take a sort of a hard look at the corporate side. And so that's both labor and non-labor reduction. Some of it is as you're just reducing your footprint, but we're also looking at service level and support offerings from a corporate perspective for a business that was at one point in time 17 markets going to 20. And now we're at 14 if you exclude Florida and likely going smaller. So these are not easy decisions to make. We've had a lot of team members that have been here for a number of years that have created a lot of value for us and worked hard. So it's never easy, but it is in moving this business towards a better margin profile, better cash flow generative state. These are the kind of decisions you have to make as we skinny down the portfolio. And I think what's hopefully not lost on people is the business in Florida was losing money. So as we exit Florida and you partner that with the corporate reductions, you're actually going to see a relatively small impact to revenue on a go-forward basis, but you're going to see a material change in the EBITDA dollars and EBITDA margin, which I think we haven't formally paired those two. But that's also important. It's not just about the margin, but it's the absolute dollars going forward as well.
Jesse, I want to ask you a question, like moving forward, like we've had you on, and like I said, David, like this is a strategy, like a shift and change in what we want to focus on. When we look at Florida now and a lot of these assets, I would still think, even though you're exiting that market, these assets are still going to be very valuable for new companies, like, to come into that market. Saying that, where do you see, I guess, the biggest opportunities for this company moving forward? Like, where is, I guess, when you focus a lot of the time, 80% of your business comes from 20% of your clients. Like, where is the focal point you see for the cannabis to kind of better clarify with like a lot of your investors as to what's the mindset going forward as we start to see more and more changes that you elaborated earlier this year?
Yeah, no, look, it's a great question. I mean, I think to touch on the first part, right, to touch on Florida and those assets, there are obviously value in those assets. And I think that the value will ultimately be sort of executed upon as you see the breakout of those assets across the different parties that are ultimately going to take advantage of it, because it becomes a part of a larger overall strategy and investment thesis for them. The top 5 retail players in the state of Florida make up 60% of the total locations of the 648 right now. You go to the top 10, it's over 85%. We were not a member of either of those categories. So when you think about Florida as an incredible opportunity for the industry, which it is, a great market for many of those operators who have invested historically significant amounts of capital into the state and are still investing in building as we speak, it's an incredible opportunity. We simply did not have the right combination of assets nor the opportunity to grow and invest to create the balance there. By putting these assets with these other players, I really do think they will have an opportunity to be successful. And we're still excited for what the state represents to the industry and to the market as a whole. For us, our core focus moving forward, as you mentioned, is in other areas. It's in other states and other sort of regional areas of the country. I don't think it's very difficult to zoom out on us and draw a circle on a map around sort of a concentration of states that you go, wow, that's a pretty strategic footprint when it comes to sort of a regional presence. And a lot of those growth catalysts, those opportunities for medical to adult use conversion or for continued organic growth in a young medical program like a Virginia as it becomes mature before it flips, those states start to emerge very quickly. So you see recent conversions of markets like Maryland and New Jersey, which are obviously great markets. You see upcoming imminent conversion of a market like Ohio. You see upcoming conversions of markets like Delaware and Pennsylvania, ultimately something like a Virginia. You have the incredible call option and flexibility for something like a New York. We have a great scale business that we continue to see improvements and green shoots in a market like Colorado. There are a number of those markets that sort of jump out and you look at it and say, that's a lot to do. That's a lot of growth. That's a lot of really transformative moments and catalyst moments in the future that we need to be prepared for. Resources, talent, bandwidth, finite for us right now, finite for everyone. So we have to hone that into a focus that allows us to execute effectively on these moments coming up. That's what will ultimately build the better business for us as a player. So those are the areas of focus. It's pretty clear.
Still 14 markets even exiting Florida. Like, it's still a lot of markets. Go ahead, Anthony.
Yeah. So I mean, talking about the overall footprint, I mean, should we expect to see divestitures of some of the other markets that you're in? And could we potentially see you enter a market that you're not currently in, but moving forward?
It's a great question. I think on the first part, I think we even hinted, we highlighted actually in the press release that there's likely more divestitures ahead of us.
Yeah.
So again, underperforming, non-attractive sort of optionality type markets, we're going to continue to evaluate, particularly where we know, like in Florida, where we ran a process and it was competitive, right? So I think we got a good outcome there. So we're recognizing that you need to make sure that there is a market, and we've highlighted that cash is king for us. So we're prioritizing cash opportunities. In terms of entering new markets, as Jesse just mentioned, we have so much in front of us with our existing footprint that we can excel at. We're spending most of our time, arguably, on a variety of things, but one thing we are working on is letting everybody recognize we are simplifying this business. Number of SKUs, pricing policies, the way the technology platforms, the way we're organized from an operational leadership perspective. We're just trying to make this as simple as possible so we can execute on a go-forward strategy. And we've entered new markets. We know how to do it through M&A. We know how to do it through the RFP process. It takes time, money, and energy. And so if you look at the return of that in the near term over the next, call it 2 years, we just need to execute in the markets that Jesse's highlighted, because those are we've already dug those wells, right? We've already invested our CapEx. We've got the canopy. We've got the retail presence like in Ohio. We just need to execute and hold ourselves accountable to delivering what I think people expect us to with the assets we have.
Yeah.
And then talking about timing, there's a lot of people, there's a lot of, not people, there's a lot of conversation around adult use coming online in Florida with the vote on the ballot in November. Did you guys believe that this was the right time to sell ahead of adult use passing potentially, as we've seen that become an inflection point in markets where value actually starts to deteriorate on the licenses to transact in those states?
I think there's a fair amount of documentation. If you look at market by market over time, over the last 3 or 4 years, there have been moments in time where you get optimal pricing for either the assets heading into adult use or the paper license. And I think
Right.
I would argue that's sort of where we are right now. I will say we're well aware of the fact that we didn't want to entertain a transaction with a group that was solely focused on the November successful ballot and converting to adult use. We're working with groups that have a longer term plan in Florida, so I think that's an important characteristic when you're going through a process. But yeah, I think there's a number of markets that have had peak valuation metrics around it, sort of the optionality premium heading into adult use. So I do think there are some precedent valuation historical transactions that you can look at. So I think it happened to line up with our timing because this is a non-core asset for us. It was the most the biggest underperformer, and I think people didn't recognize as people were trying to do the math around our portfolio. If you don't know how Florida's performing, I think we're a bit of a head scratcher. Like we do list the top 5 revenue, gross margin, EBITDA, but people couldn't put the math together because no one realized how we were performing in Florida with the asset as it was put together.
On paper, it's a great market when you look at it, but when you look at, some of the stats that you outlined, Jesse, what was it? Top 5 owns what kind of market share? Top 10's 85%, and top 5's what again?
About 60% of the total retail locations. And I think that Florida is an incredible market in the sense that we don't even fully understand yet
Right.
what that market's going to look like. I'm staying positive. I do believe it will convert, right? I believe in the November ballot. Yeah. I think, logic wins the day, right? Like people support the initiative. I know there's going to be a bunch of, support rallied against it, but I do think that it will convert. I do think it will be a good thing for a number of the existing operators there. What I think is going to become staggering, what I think people are underestimating, is the amount of time that those top 5 and top 10 companies have had to not only create maturity in their distribution network from a retail, but also incredible facilities from a back of house point of view.
Right.
This is a market that has never truly had a wholesale ecosystem. Think about it's a couple $2 billion a year in revenue that's servicing patients right now that has never really truly had a wholesale ecosystem. And so there is dormant capacity all over the place. This is the state that has probably some of the most non-industry greenhouses and young plant facilities. And so this is an unbelievable opportunity for a flourishing supply chain from a back of house and a wholesale.
That makes sense.
It'll be great for the consumer. It'll be very difficult for the underscaled operator who's trying to participate and take advantage of verticality. We believe in the verticality of those markets, which is why we're excited about the investments that we've made into some of the upcoming transitional markets that we mentioned. Florida we were not going to be a supply chain partner that was going to be in that conversation.
Well, when David mentioned about you want to be dealing with potential companies that are looking at this long term as far as selling these assets and not necessarily so much on depending whether or not adult use passes. But would that not have at least some sort of portion of play into it? Because to Anthony's point, on paper, it looks like a very lucrative time to sell as we're only 3-4 months out from a federal election. And that's a big selling point, I would think.
I think it drove tension, right? To David, I'll let David weigh in on it. I think it drove tension in the process, which is what ultimately you want to see when you're having these conversations, right? I think there's enough uncertainty still there that probably drove a bit of caution for some into the process. But ultimately, I think the reason why we're excited about someone with a long-term vision is that we know that change in this industry is inevitable, right? It's a matter of when. So Florida will be one of the largest recreational cannabis markets in the world. It will happen. I believe it will happen this November. I think others believe that will happen this November, but I think there's a lot of operators who are fully prepared to weather the storm, that if for whatever reason it did not happen this November, that's okay. It's still an incredible medical market that is doing $2.5 billion of revenue this year, with a 5% plus enrollment as a percent of population from a patient-based point of view. It's still a very good business for a lot of operators that they can build long-term strategies around.
Yeah. Anthony, you want to go again? Go ahead.
It's hard to follow. That's a bang up description of the Florida market. I mean, moving forward, I mean, what's really the focus? Is it going to be Ohio? Is it PA, Virginia, all that common core kind of standardization? Like what do you really see the business being on the back of this restructuring?
So I think the states you mentioned are front and center for us. So Ohio is a big one for the second half of this year, right? We're right in the throes of it. We've got 5 stores. We've got cultivation. We've got manufacturing, or tier 1 cultivation. So we're going to be fully built out. We put that in the press release. That's been one of the markets that's had a bit of a gross margin drag as we were underutilized. We're moving towards full utilization in Ohio, heading into adult use. Delaware, it's a market that no one talks about because no one's really there but us, but it's a great market for us. It's always been an outperformer for us. And so that's coming either later this year or at the latest, probably April of 2025. So we're prepared there. We're built out and we're ready. Pennsylvania, we've got a huge back of house manufacturing, cultivation manufacturing. Yeah. So that's an attractive market for us as well. But, I would say Jesse and I spend a good chunk of our day moving through the organization and finding opportunities and asking questions such as, why are we doing this? And it's amazing. Yeah. You uncover opportunities for efficiency gains, for transparency, to give accountability to teams. Part of this cost reduction is actually giving some more transparency to operational leaders and a more accountability across both wholesale and retail, to make sure they're connected in terms of the distribution of material coming out of the back house. So we're fine tuning the way this decision making engine is going to look going forward. We want to be more nimble. We want to take costs out of the system. Simplifying everything we do is the only pathway forward for us, not only from a footprint perspective, but I do think we uncover things every day that we can be doing better, more efficiently. Yeah. And just finding what good and great looks like, and having sort of, moving towards a, if quality is a number, it's a zero non-conformities for whatever that role is across the supply chain. That's where we're trying to move towards. And you got to define it before you can hold people accountable. So we're spending a lot of time, market by market, facility by facility, making sure we're understanding, people understand what good and great looks like. Because we haven't always done that. And so that's an important part of the efficiencies we're going to gain on a go-forward basis in the markets that really matter. So we feel that we're spread too thin, including Jesse, including others. And so by shrinking the footprint, just spending more time, money, and energy on the things that we can be most impactful. I always say, in any given market, if we can be doing better than we are, then we should be, right? And so that's why 1,000 cuts can happen for a big platform. And as you mentioned, we're still in 14 markets. It's not as if we're still a big organization with a big top line. There's still work to be done. There's no question, to get to where we're racing to be, which is by the end of the year to look like a very different business geographically, but also operationally and financially.
You guys want to talk about earning your stripes in the first year as running a business. Like, you guys have earned this in the first 6 months of 2024, needless to say. But, you did highlight Delaware and how nobody's talking about Delaware. Either question for you guys, but what can you share to our audience about Delaware and the opportunity that it does present? Because again, like, we don't talk enough about this, but what is it like as far as total addressable market, and then as far as the competition scale amongst other companies in that state? Like, what's that look like right now? Maybe it's a question for you, Jesse. Go ahead.
Yeah, I mean, look, like David mentioned, Delaware has been a market that we've been operating in for quite some time, and we have been, in a pole position, top tier performer there since as far back as I can remember with regards to the operations there. I think we're well positioned moving into a transition. Delaware is has some similarities and characteristics to other markets that have a beach, right? Where there's tourism, there's seasonality, there is a lot of sort of, I would say, convenient and casual consumption with regards to the forms and the way that we see consumer behavior. I think there's still some great brands to be launched. There's some great brands to be built in the market. It's probably a little bit brand light which is good. I think there's continued opportunity to drive foothold there. Love our locations. I mean, we were very fortunate in Delaware with the locations, and they've built an incredible following. We've got great partners in the market. So, one of the things that I think is really interesting about some of the conversions that I see upcoming, I look at Ohio, I look at Delaware, I look at Pennsylvania. We've been doing this for a while now. I know that we told everybody when we came into these roles, we were going to try to approach as outsiders, which is why I think we've shown we will make the difficult decisions like divesting a market or restructuring a team or, fundamentally rethinking SKU rationalizations and a number of things. Like there's nothing sacred within the portfolio right now in the way that we're approaching things. But when you look at something like a Delaware and those other markets that I mentioned, there is a group of operators that exist there that you become close with and you start to build relationships with, and you start to cultivate really strategic opportunities to work with them in both wholesale and brand sort of expansion and development. So I think we feel really good about those markets, probably better than we have historically in others, that we've got great groups of sort of partner operators to team up with in order to be able to build meaningful business there. So I think Delaware is going to be good. I think you'll see a significant lift out of that market.
Well, Anthony asked earlier, and I know that you got a lot of experience. Like you've worked in the agency world, worked with some of the biggest brands, and you helped out with messaging. Like to Anthony's point, like, David obviously executing has a lot of experience doing that. Has been how long you been with the company now, David? How many years has it been?
A lot. I joined in late 2016. So
yeah,
it's been a minute. It's been a minute in the industry.
8 years. So when you think about that, Jesse, like I said, like you understand messaging and branding, as we start to scale back and focus on these key markets, like if you were to sit in front of a group of investors and say, what is your bulk? What is your strong point as a company? Like, what are some of those markets that you outlined? Virginia, obviously, Pennsylvania, Ohio, that's going to be the main focal point, you think, for the company moving forward outside of that as well?
I do. Look, I think that, David and I have shared, we share a lot of videos back and forth of other really smart people talking about how they accomplished great things. And it's like, great, let's steal some of those ideas, right? There's a great talk with Reed Hastings from Netflix where he talks about this concept of talent density and how the real secret to their success was that they were unbelievably blessed to have an enormous amount of talent on their team. And what they did is they tried to ensure that there was so much density by putting those people in meetings together, by having them focused on a finite number of sort of goals and activities that they were working towards, and just turn them loose. And you get some incredible creativity. We have that really difficult balance of we've got great talent density, and we don't want people to fall in that trap of like, if Ford would have asked his customers what they wanted, they would have said faster horses, right? So we want to foster creativity and we want to let people sort of run. But at the same time, we really do understand that in many places throughout our organization, we're just doing too much. We're just making too many things or doing too many things. So simplifying will allow for more focus and more of that talent density into those conversations. Simplifying the map allows for more focus and more talent density into the execution of those markets as well. So I think, I've used this example before, and this is not to take anything away from any other operator. If you've ever heard me talk about our industry or other companies before, I'm usually the one saying, that I'm rooting for them. We are not going to be Walmart, right? We're not even going to be Target. We are not going to be the national player that has the most locations, that's in every state, that's servicing every market. What I think we can be, and I think what we should be, is an incredibly powerful, regionally focused business that just does a great job understanding and servicing those communities. And so to me, I live down south now. Publix sticks out right away. Like totally. Publix as a grocery chain is like, if you're from this area, it's like if you're eating a sandwich, you're eating a pub sub, right? Like Anthony gets in Florida.
You get Publix.
You get Publix, right? So I want to
even Kim's outlined that too. Like her focal point, Florida. They were in Pennsylvania, but a lot of the focal point wants to be on Florida. And then I think the next opportunity that they're looking at is Georgia, which is right next door. But to your point, like I guess this is where we're going, and you make a good point. Like this national footprint about being in all these states in the early days of cannabis seems so foreign now. But obviously, your everyday business has got to mirror that same image and same approach. So, anyways, continue on before I interrupted.
No, I just look. I think everyone's fate will be a little bit different. There are companies that I think are incredibly well positioned to be national players that can have the resources to deploy to be able to build brand equity and build that sort of connection with communities in 20, 25, 30 states, right? We're not one of them right now. That's just not where we are. And I think that one of the things that I've learned throughout my past in, watching the rise and fall of several industries and several really interesting businesses in them, is that you have to understand who you are, where you are. You have to be able to be adaptive and flexible and risk when it matters. You also just have to be a realist about what is the hand that you're playing. And I think we are very lucky that, to your point, we're still in 14 markets, so there's a lot of clear to work with there, as David has said many times. We can carve this down into an unbelievably meaningful business that when you sort of zoom out a year from now, you go, wow, that was a great business that was living inside of that other business the whole time. And all they had to do was carve into that better form. The corporate restructuring is in advance of those things that we're preparing to do. So this coming out of this year, we will be fundamentally different. And I think people will look at it differently.
David, is there a certain amount of markets that you want to be in when it's all said and done? Is that something you can share, or you want to steer clear of that?
I think it's still early. We wanted to make sure Florida was the priority for us. We knew there was real demand, and we wanted to get that to a point where we could make the announcement that we're leaving. We got money in escrow, and I think we're very confident on marching forward. We wanted to partner that with the cost reduction that, to your point, doesn't happen overnight. It takes a long time to plan that and make sure you can be as least disruptive as you can be to the organization, to the culture. That's very important to us as a leadership team. But I do think we will be smaller by the end of the year. I think that's probably the best we could say at the moment. We've said, I think, on every broadcast, Virginia is not for sale. Like, we just continue to think that it's a great market for us. We have 2 of those licenses. It's a great business. It's thriving. We got a great leadership team there. So really excited about that market. But there are others that are, there is demand. There's opportunities. We just have to be thoughtful, particularly if it's underperforming. Because again, I don't think people understood the math of our business because of Florida. I think it's going to be easier to understand who we are going forward. You can almost look at us as the entire portfolio, and we have Colorado, right, which has a different look and feel to it. But now we're kind of getting closer for people to actually understand what our business looks like. So I think we will be smaller. It's not going to happen overnight. None of these transactions happen overnight. We want to be very thoughtful about it and go through the right process. And we're working with the right counterparts. We're working with advisors to make sure we get all the right input. But we will be smaller by the end of the year. And again, simplifying this business is the message. That's how you build a better business. You don't need to overcomplicate it, because left unchecked, all these businesses will be too complicated. And I think, to Jesse's point, we were very good in the early days of winning licenses and or acquiring licenses in new markets. We were the first non-Colorado group to enter Colorado. So we know how to do that. Phase 2 is we were partnering with another MSO, right? So we've talked about this being phase 3 for us. We're looking at every portfolio asset, and we're looking at the optionality for the next 3 years, because we have more information. Like you said, Chad, 3 years ago, it seemed like everybody was planting flags and everybody wanted to be a multi-state operator.
Sure.
We have way more data. We have way more understanding of the optionality, and you just have to pick the right places to put your time, money, and energy to build brand, to build margin profile, build scale. And that's what we're doing right now. That's truly is phase 3, and it's a year-long process.
That's for sure. Anything else you want to touch on, Anthony?
I'm good on my end. We covered all the bases that I had.
Everybody has their own unique sells in these early days. I remember the Canadian LP days. It was low cost producer, and everybody wanted to be
funded capacity.
Funded capacity.
Was the beautiful buzzword going around Canaccord.
And then suddenly they couldn't sell their product because it was size and scale, and the product that was being produced was garbage. But that's just the mature, this industry is growing. We live and we learn, but most important thing is that cash flow is everything right now. And I think what's great about these podcasts and speaking to you is the availability and just the transparency. But, you keep mentioning, Jesse, 2026, 2027, not only for the Cannabist, but the overall industry as a whole. And I think the more and more I hear that same message, not only from you, I'm beginning to hear that from other people in the space. And I think that's what we try to just educate a lot of our audience here, is that, there's some great catalyst moments on the short-term horizon. Rescheduling obviously is an incremental step in the right direction. But, when we think about SAFE, and then eventually we can only fathom about descheduling, like, that's going to take a little bit of time. But that 2026, 2027 mark looks like it could be a time that cannabis really indeed goes full-fledged mainstream, in my opinion, but I'm sure you guys probably have some agreement towards that as well.
Got to zoom out. I think this is if you're going to be excited about the opportunity in front of us, which is still, I think, unbelievable. It's transformative from a consumer point of view, right? If you're going to be positive on it, you have to be realistic about what it's going to take to get there. And I know that we all thought we were going to be in a different place in 2024. I did as well, right? I mean, 2 or 3 years ago, I thought 2024, we were going to be in a slightly different place than where we are. But the reality is the future for the industry is inevitable. There is $150 billion plus worth of weed that'll get sold in this country.
Yeah.
Only 30 something of it's going to be legal, right? So it's not like there's not an addressable market there. It's not like there's not a desire for the products there. It's not like there's not incredible brands that are doing all sorts of cool R&D and making great things that you're going to want to use that don't even exist today, right? We will continue to see innovation and great products and great opportunities to integrate this into your life. At some point, the bill comes due for DC, for everyone involved. And the catch becomes, how do we truly make this accessible and safe?
Yeah.
And the only way to do that is through a regulated framework that allows for common testing, common goalposts for everyone. That day is coming. At some point, they will prioritize people's safety. And when that happens, you will see these frameworks continue to mature, more product availability, more accessibility. You'll have eighths that are cheaper through legal retail frameworks than you could buy on the street. And once that happens, it's alcohol prohibition all over again. Like we're off to the races. And so that day is coming. I do believe, like you do, it's probably 26, 27, something like that, where you're going to see just 2 or 3 catalysts in a row from a regulatory point of view that really put us at a much more normalized existence. But you have to believe in that. And you got to look at where we are right now and say, this makes no sense, but it doesn't matter. We just have to stay focused on the horizon.
Hey, Fox News continues to highlight the industry, and I don't care whether you like Fox or not. The reality is, if somebody's talking about it in the media landscape, that's a good thing. If they're not talking about you, you're in trouble, right?
Soft disclosure, right? I mean, they started talking about UFOs, and I'm waiting to see somebody land in the backyard at this point. So it's coming.
One thing I want to touch on, I'll let you guys run. Ohio, that's set to go live. Any hurdles, all dispensary locations that you have? Is there anything that's stepping in its way, David, or is all systems go?
No, we've got a pathway for all 5 of our doors. So the team is on it. We're focused, regulatory team executing. We know everybody in the leadership team knows that Ohio is important for us because eyes are watching. So execution is front and center for us.
Okay. Are we going to the big game next November? Michigan, Columbus, you guys Buckeye fans?
I grew up in Pennsylvania, so I hate to say I'm a diehard Penn State fan. I had too many friends on the team.
That's a pretty nice.
That's you're talking about the Stanley. I thought you were talking about the Stanley Cup game tomorrow, right?
There's only one big game in college football, and it's either played in Auburn, Alabama, or Tuscaloosa, depending on the year. That the Iron Bowl is the game, and so yes, I will be there.
I got bragging rights this year, only though we did cheat a little bit. But I'm a big Maize and Blue fan. But we're in trouble because Jim Harbaugh headed west, and he took everything with him. So we're one and done. But there's no better place than to watch a game in Happy Valley. That is quite the atmosphere.
It's a bucket list. It's so good. It's an amazing experience.
Yeah,
Hart hasn't taken me yet, but we'll see. Maybe if sales numbers over, I'll get him in.
I was looking at games yesterday. There's a couple that might actually work. We'll talk about that.
Yep.
Nice. Well, we should do that. Listen, I appreciate the transparency and the update. Hopefully, everybody got some great feedback. Leave some comments below. Any questions that we missed, leave comments below. We'll reach out to David and Jesse, and we'll get back to you based on their feedback. Gentlemen, enjoy the rest of your afternoon, and thanks for checking into the TDR Trade of Black podcast.
Thanks, guys.
Thanks.
Thanks, guys.
What is going on, everyone? What'd you all think of the interview? Did you like it? Leave some comments below. This industry, it's heating up. So if there's any information that you want us to cover off, we will do it. As this industry builds up more and more momentum, we want to be here for you. And we want to take this viral. So make sure to smash that like button, click on that bell for notifications, and please, as usual, we wouldn't be here without you if you didn't subscribe. We appreciate it. Thanks for watching.